Hello, Thursday. Some news? Some news. United States of America? Yeah. Real total net worth households and non-profit organisations. Going back to 1950, and it's been a good bottom left, top right. But lately, you could say actually that the last two lumps up there in that trend have been aberrations. Is that the right word? The tech bubble and the housing bubble. But it must be said that the trend at the moment is below the last trend. See what I mean? All pointing upwards. It is below trend, and it's almost the equivalent of same household worth of 1997 or something like that. Doug Short chart, very good. And he takes everything into account that he can possibly put in there to make it as real for us as possible. Calculated risk chart, Philly Fed State Coincident Index, which is a good read. Again, going back to 1979, you can see when it bleeds down, it's a recession, basically. All the way along, recession. There's an aberration. And the 9/11 type number, where it goes down, but it's not a recession. And perhaps that should have been called a recession, but wasn't. And you can see now that basically it's going. You can see last year the little saddle down the U, and it didn't really get down properly. But now it's coming down really rather nastily and worryingly. Third chart, again calculated risk, this one, and it gives us an idea about what might be going on in the background, or one of the reasons of why things are looking so shabby at single family housing starts and the unemployment rate. You've got 1 unit structures building houses basically, and how many are being built on the left hand scale, and you can see that's in blue and it goes uppity up, and towards the it's the start of the crash, 05, 06, it starts falling off a cliff and comes all the way down and drags unemployment down with it. And you can see that generally when 1 unit structures aren't being built, unemployment goes up, because for the labouring class this is what happens. And until more 1 unit structures are being built, there's nothing that can be found for that type of person to actually do in the United States, it seems. China's growing concerns. Warren Mosler. I'll read the whole thing, because this is the whole article, but I'm sure he wouldn't mind me reading the whole article. And yes, it's me that changes the pictures on some of these. When it's wrapped around an advert, I sometimes change and overlay a better picture than the advert that was there. So how about all that talk that it's regulation that's holding back the US economy? The regulation and government interference in China is far beyond anything imaginable in the US, yet their growth rates are far beyond anything imaginable for the US. And they manage higher levels of employment with consumption only about 35% of GDP. 35% of GDP in China, 70% in the United States. So what's the difference? How about Chinese annual deficits running well over 20% of GDP? State lending is functionally very close to state deficit spending. It's all wrapped in together. I kind of talked of that yesterday. They are getting themselves into trouble with it. It's a bit of a wind up by Mosler, but he's trying to make a serious point by over elaborating. In the normal course of business, anyway, much like the US did with World War II, with similar growth rates. Okay, so 20% might be a tad too high for the kind of price stability most in the US would prefer. And so now China is fighting a 6% inflation rate, hardly hyperinflation, and certainly no reason for us not to go to the 12 or 14% annual deficits we probably need to sustain full employment given current credit conditions. In other words, for the size of government we currently have, we remain grossly overtaxed. I wouldn't get too wound up with that bottom line. Stick to the idea of Warren Mosler that basically the United States should go to 12 to, let's say, 15% of GDP for deficits. To discuss. Financial Times global slowdown. This is the IMF report that came out that says that everything's slowing. Releasing its latest assessment of the global economy on Tuesday, the fund said financial instability, exacerbated by poor policy making, had worsened considerably and threatened growth. The global economy has slowed. Financial volatility and investor risk aversion have sharply increased, and performance has continued to diverge across regions, the report said, not very interestingly. Policy indecision has exacerbated uncertainty and added to financial strains, feeding back into the real economy. So you need to be able to read IMF docs or be that way inclined to understand that immediately. But the chance of a serious slowdown in the world economy, with growth falling below 2%, has doubled from earlier in the year. Oliver Blanchard, who's chief economist at the IMF, who I don't mind, he comes across quite nicely in talks. What is needed to sustain growth is that households and firms increase their demand. Right? Households and firms increase their demand as fiscal deficits are being rolled back. What we observe is that it is not going well. Well, of course it can't, can it? Right, this is by Robert Skidelsky, Lord Skidelsky, in Project Syndicate. Very interesting article. He's always a good man to listen to, although he's a bit slow in his speaking, but in writing you can read as quickly as you like. These are just the last two paragraphs of an interesting article. You'll get an idea from the last two paragraphs what the whole thing was about. History never repeats itself exactly, but there are lessons to be learned from that episode. Germans today would say that, unlike reparations, and that's what it was about, World War I reparations that Germany had to pay, the Greek and Mediterranean debts were voluntarily incurred and not coerced. Are you up to speed? This raises the question of justice, but not the economic consequences of insisting on payment. Moreover, there is a fallacy of composition. If there are too many debt collectors, they will impoverish the very people on whom their own prosperity depends. In the 1920s, Germany ended up having to pay only a small fraction of its reparation bill. But the long time it took to get to that point prevented the full recovery of Europe, and made Germany itself the most conspicuous victim of the Great Depression, and bred widespread resentment with dire political consequences. German Chancellor Angela Merkel would do well to ponder that history. Do you understand? The trouble is, obviously, this is let the Greeks off so everybody can breathe again, but that also would mean let the Portuguese off, let the Irish off, and let great chunks of Italy off, and Spain off, and Belgium, and maybe France. And the question is, what is left? But for anything to move forward, debt forgiveness has to happen. Israel and America on the wrong side of history. Melbourne, Australia, shortly before Israeli Prime Minister Yitzhak Rabin's assassination by right-wing Jewish extremists in November 1995, I met him in Tel Aviv. I was visiting Israel as Australia's foreign minister to argue the case for rapid implementation of the Oslo peace accords, all the way through to negotiated acceptance of Palestinian statehood. 1995. I concluded my pitch by saying, with perhaps a little more tongue-in-cheek than was appropriate, but of course I'm preaching to the converted. And this was to Rabin. Rabin's response is etched in my memory. He paused, then said with a little half-smile, "To the committed, not the converted." For all his deep emotional attachment to the idea of Israel, embracing all the historical Judea and Samaria, Rabin knew that the only way to ensure a democratic Jewish state with viable, secure borders was to accept a Palestinian state alongside it, equally secure and viable. They would share Jerusalem as a capital and find a mutually acceptable solution to the enormously sensitive issues of the return of the Palestinian refugees. And there are still millions of them out there. Rabin's murder was a catastrophe from which the peace process has never recovered. No Israeli leader since has shown anything like his far-sighted vision, commitment and capacity to deliver a negotiated two-state solution. Wall Street Journal, Market Beat. Will US investors buy Australia's mortgage story? Sydney. National Australia Bank Limited, one of the country's biggest lenders, is planning to test the appetite of US-based investors through an offer of residential mortgage-backed securities. That includes a US dollar tranche for the first such issue by the bank since 2006. You up for it? Next, the International Monetary Fund has slashed its economic forecast for Australia, warning of new global recession that would hit commodity prices and drive millions worldwide into unemployment. Hours before the fund published its unexpectedly gloomy update in Washington, the Reserve Bank of Australia released a statement expressing concern about the global outlook and opening the way for interest rate cuts should things deteriorate. Deteriorate, mate? The Australian dollar slid to a 5-week low of US dollars 102 cents over renewed concerns about Europe after Italy lost its AAA, its A+ credit rating, and Australian shares fell 1%. This morning's Financial Times, Rio Tinto warns of a slowdown in demand. Rio Tinto, huge commodities outfit, one of the world's largest natural resources companies, has warned that some of its customers were asking to delay shipments of metals in a clear sign that the financial turmoil is starting to affect the commodities sector. The warning represents a marked shift in industry sentiment from only 6 weeks ago, when most miners, commodity traders and oil groups painted a bullish outlook for commodities demand and prices despite falling equity markets. This is a weird one, but I think it's our Zarathustra, It's also Sprach Analyst and written by Zarathustra, is our boy. I imagine so. Ominous sign South Korea is selling US dollar, and it's a huge spot, this really is. South Korea starting to feel the crunch already. What always happens in a downturn is that OECD money comes out of emerging markets. Always happens. Probably always will. But I will note here, although I don't think Zarathustra does in the article, that China will be there with money to fill any holes that appear in Asia's when money goes out. China will be there to fill that up. You understand what that means, obviously. And this final graph is a beauty, an absolute beaut. It's barrels of oil per person per year. The world. going back to 1950, and everything was ramping up wonderfully till 1970. Then it went wumpy bumpy. And then just before the double dip recessions of the 80s, it came down and has been totally plateaued. Barrels of oil per person per year has been totally flat since 1980. And there's a good chance that that is the reasoning behind everything. See you tomorrow. Bye.